G'day traders, I'm Greg McKenna. Welcome to Markets Morning, the 30th of November 2018. One more month, probably only about 3 weeks until the Fed has its next FOMC meeting of real trade. And to that extent, the FOMC minutes this morning, my time, Thursday afternoon in the US, and then of course this big G20 meeting and then OPEC are the big events going forward. Just quickly on the FOMC minutes, to me, what they did, and this is important, is they suggest that what Fed Chair Powell did yesterday was give guidance on what the FOMC is thinking rather than fold to President Trump. Now, that's really important. I know that everyone wants to characterize it as Jay Powell, a man that worked for Reagan, a man that is independently wealthy. He may not be a billionaire, but he's got well north of $100 million as far as I'm aware, is not going to fold. That's the way the narrative ran yesterday. You've got to look through these headline narratives from the press and that kind of stuff. Look at the minutes, look at what he said, look at what other Fed speakers have said, and I've alerted you to over the recent month or so, and it's entirely consistent, which is that that tweet I've got up there right now. Now, the key thing here is that, and I don't know if I mentioned this yesterday, I know I've had so many different conversations. I missed an opportunity this week, and it's something that I've realized that there are odd occasions where we've assimilated, me and then our discussions, what we think an important event will be. Now, it doesn't mean we're 100% right, but in the case of Fed Chair Powell, there was no way he was going to be anything but give the message that he gave yesterday. What I didn't recognize and didn't communicate and got utterly wrong was that those headline chasing algos were going to run. They were going to run with the dovishness, and pardon me, because they so dominate stock trading and are big in foreign exchange trading, something like 35%, everybody else moves to the sideline and the buyers come in. Now, in 3 days' time, it's not going to matter. People are going to look at the bar and they're going to say, hey, it's an up bar, But at the time, it is an important piece of market information. So that's the bit I missed, and that's what I'm going to strive for to get right. Just because we know what's going on does not mean that there is not going to be an announcement effect. Does not mean there's not going to be a big reaction. So that's something to work on. Why didn't bonds really do much? Less, if any, in a material sense, headline chasing algos. Anyway, quickly around the grounds last night. We saw that stocks were down a little bit, well off their lows. They hit their lows when trade hawk Peter Navarro was added to the guest list for the President Trump, President Xi dinner, and that really got people thinking, oh, heck, maybe this GM thing that I've been talking about really has, put President Trump in a bit of a funk. He's the kind of fella that, seems to have pretty good one-on-one relationships with people, except his European allies, of course, and is much more conciliatory in that sense, and then he tweets and rants and all that kind of stuff. So there is a lot of expectation, I think, pardon me, about a positive resolution. Now, I'm not sure the Americans are ready to resolve this just yet. One of the things that they recognize is that the Chinese do give you a big cuddle and won't let you out of the cuddle. They want to talk and talk and talk and talk and talk. It's like that partner you broke up with that just wants to talk about what they've done wrong. You can't get rid of them. Everyone's been in that situation, guys and gals, at some point, unfortunately. And I think the Americans recognize that they need to, or that they want to, in terms of getting their own goals. So I'm not sure. I think we'll hear some conciliatory stuff, but I'm not sure. So the gap on Monday could be either way, depending on how it's framed. Not only depending on what happens, but depending on how it's framed by the press. They are increasingly an important player in what's going on in markets, so keep an eye on that. So stocks were down, some selling came in, and I think maybe, depending on what gets released tonight in terms of press releases and all that kind of stuff, but we could see a little bit of a drift in stocks, given the volume of selling that came in, because Navarro was announced, stocks fell, they rallied back. The Fed didn't scare them too much because it was about data dependency, and by the Fed talking about data dependency, that gives the market room to exercise its own bearishness about the outlook. And to that extent, it is worth noting that there's been a marked increase in jobless claims. This is initial jobless claims over the course of the last couple of months. Now, given the size of the US economy, you know, these numbers are still tiny relative to, you know, these were record numbers since 1969 when I was born. So, you know, in that sense, these are still remarkable numbers, but there has definitely been a noticeable uptick in initial jobless claims. So just keep an eye on that as we go forward. And keep an eye on bonds. Can I blow that up? I think I can. Let me just see if I can blow that up for you. So this is pardon me, this is the S&P 500, this is bonds. And the analogy is, and you can see that, you know, they have a reasonable directional move. And the analogy being that bond market is the head which sees something and tries to react. Stock market is a tail. It takes a long time for the information to go from head to tail. So, you know, if the bonds are rallying, which they have recently, if they can't get through 325, which they have not been able to, double top, we saw them go into 3% initially last night. They found resistance right where they should have in that 299 to 301 region. They get down through there, then I'll be looking for 280. That will signal a slowdown. So we go from talking about stocks being pressured from Fed rate hikes to stocks potentially being pressured from an economic slowdown. So just keep that in mind. You know, as the data flows, we're going to get ebbing and flowing. There's going to be a gap in terms of time between either one of those results. And of course, that's impacted on the US dollar. And so what we've seen is, you know, this broad kind of wedgy, patterny thingy. It got good support here. It held support again last night. I know you can't see that. If I blow it up, you might be able to. I'm not sure how to scroll though. Oh, there you go. That's how you scroll. So you can see it found support there. It went through on that day, but then came back and then found support. So dollar index is a made-up thing, but people look at it. So it's held support for the moment. It fought back last night. So we'll wait and see. Let's dive in and we'll do currencies. Then we'll come back for commodities, stocks at the end, and then a little bit of Bitcoin. So what do we got? This is the euro. Essentially, if you take everything off, remember I took everything off yesterday. If you take everything off the chart, you've got a box. Well, you've got two boxes. You've got a 118 to 112 box, and you've got a 115 to 112 box. As it stands at the moment, 114.40, 115 is probably resistance. Now, what happens to euro if there's trade glasnost? If there's trade glasnost, then that is going to be positive for euro. In the initial instance, if there is a doubling down of the trade war, it wouldn't surprise me if everyone wants to take that negatively for the US dollar as well. So there's every chance that the US dollar remains under a little bit of pressure. But remember, these are ratcheting moves within a range. 112 to 115, roughly the range. Three big figures for euro. German inflation last night continues to put pressure on the ECB, and we get EU inflation out tonight. In terms of dollar yen, so euro was up about 0.3 last night. In terms of dollar yen, oops, wasn't supposed to do that. I'll come back to that. Doesn't matter. I'll figure it out later. In terms of dollar yen, it's kind of rolling over. It's up from its lows from last night, but it does look to me like it wants to retest this trend line. It was 112.85 to 113. Now it's just, we're going to call it 113. A break below that obviously will signal further US dollar weakness. It may signal stock weakness too, but we'll have to keep an eye on that. In terms of sterling, sterling underperformed, whereas euro made 0.3 or 0.2 or 0.3, sterling lost 0.3. So euro sterling went up. What do we got? We've got it. It rallied with the US dollar. But this is the thing, you know, it rallied with the US dollar. That's the initial move, and then folks think, heck, you know, Brexit is still looking like it's a chance of going out backwards. You know, there's more moves for second referendums and all that kind of stuff. It's just really uncertain. At present, 126.60, 133, ratcheting through there. Shorter time frames, you can see some nice trades if you go down a time frame. But in terms of the dailies, it's a little bit variable within that range. Obviously, that break didn't work. It reversed on the US dollar the day before. Aussie dollar, a false break. We made a high around 44. I think it was 44 bid. So, 44 and a half or 45 offered. But then we came back down. So you can see, rather than draw the box, which I've drawn on Markets Morning, the written piece, I've drawn the channel. So you can see that maybe, this is the channel. But my sense is you've got to get up and through. I've called it 40. You've got to hold above 40 to get things really going for the Aussie. If that happens, then the Fibbo of the big move from 81 cents is 74.40 as a 38.2%. It's not that overextended. Look at it on a weekly basis. It does look like a break of, either side of that heck of a big bar down there, which was 73.37, 71.63, and hold is where the next big move comes from. So we'll keep an eye on that. In terms of dollar CAD, the dollar CAD was roughly flat last night. You can see it had a rally, it had a sell-off. That's potentially a high for dollar CAD. And so now we test down towards the trend line, which is 132.30 or thereabouts. Still quite a few points, particularly if you're using a little bit of leverage in that. Canada's GDP, monthly GDP. How can you do monthly GDP and have any idea that it's actually real? But anyway, we can't even get monthly unemployment right, or employment stats here, without massive volatility. Anyway, that's another story. So watch that tonight. That's going to be pretty important. Also, John Williams, who's the New York Fed president, is going to be talking today, and he is, if there's been any misunderstandings, or if the Fed thinks there's been any misunderstandings, he will clarify. Kiwi is down a little bit, not much. It underperformed the Aussie. The Aussie was up about 0.2. The Kiwi was down about 0.2. So Aussie Kiwi has gone up a little bit. So that's hanging a little bit. If it can't get through 69, then it's more likely to come down through time. So we'll see how that one goes. Now, this is the one I've talked about this in Markets Morning, the written piece. This is my developed market, emerging market sort of hybrid currency, dollar Sing. And I know that MAS is a formidable opponent when you want to talk about, big moves or decent moves in dollar Sing and that sort of thing. But for me, what have we seen? We've seen the South African Rand gain something like 2.5% in the last couple of days. We saw the Turkish Lira gain 1% overnight. There's this this is where I think that this expectation for positivity. Now, of course, Morgan Stanley said, double, get in and buy emerging markets, which is, going to be good for those currencies. But, pardon me, what you're also seeing, I think, is some expectation of glasnost in the weekend meeting. So that's the big question we have to ask ourselves. There will be a gap, probably one way or the other, depending on what happens on Monday morning our time. The question for us is it already in? That Monday morning Asian head fake is a real chance. If emerging markets are rallying, and they have been, Indian rupee gained about 1% last night, thereabouts. So dollar roop down, 1.22% or there. Oh, it's down again. So, those kind of things. Is the good news factored in? That's the question. Dollar Sing is my go-to for that. It's managed to come down towards support. It's looking, I'm not going to rule this line out or this channel out because it's been so good on the top and the bottom, but a breakdown would suggest something about the US dollar. It would certainly suggest something about emerging markets and the US dollar. And that in turn would suggest something about risk appetite. That in turn would suggest something about currencies like the Aussie and the Kiwi and those kind of things. So we'll just keep an eye on dollar Sing, see how it closes the week and the month, and then we'll talk about it. Looking at gold, up a little bit, 12.24, down, up, not really going anywhere. I've driven a line there so you can see what's driving my thinking. Why sort of 12.38 is for me the Maginot line for gold. It was support, resistance. Now it's been support on a resistance on a closed basis, so keep an eye on that. So for me, we just got this range waiting for the next shoe to drop. I know that some of these ranges are wide enough that you can actually make money from, but then you've got to go down the next level. And I'm looking at these charts on a daily basis, so I'm no good to you. Like I do talk about the 4 hours, as you know, but you know, if I start mixing up the time frames, then I start to lose clarity. And instead of being a macro backdrop of what's going on, I just start jumping at shadows and price action and all that kind of stuff. We all have to jump at price action because it drives our P&L, but you know what I mean. Not a shot duck, it seems. Rover went to fetch the duck and the duck flew away. Anyway, so we did break lower last night. So we broke lower in early Europe. Europeans came in. We were so close to the bottom or the recent lows, and they just gave it a whack. The sellers came for oil, not in the same manner. I think there's a little bit of selling exhaustion happening. You know, something can only go down if there's people left to sell, and that doesn't appear to have been available last night because we didn't see a collapse. And then we heard a Reuters story. Again, headlines moving markets. I know they've always done it, but they seem to do it increasingly. That's because of the algos. We heard a Reuters story quoting sources about a meeting that was supposed to have taken place, that the Russians are looking at reducing supply along with OPEC and the Saudis. What was important about that is that the message was, yes, Russia wants to get busy, and so we saw a 2% rally in WTI and a 1% rally in Brent. But what it also said is the Russians are a bit leery about how soon they can do it. They can't do it yet. And they're not sure about how much. So what would I expect? Expect Russia to say it's going to work with OPEC, but don't expect a massive cut, would be my guess. So that's WTI. So can it form a bottom? It's close. It's close. It's close. Don't have a signal, but it's close. Same story with Brent. It's almost exactly the same chart. So, you know, same sort of overdoneness, some volume coming in. And so, you know, you could realistically, now this will round out. So the MACDs, the moving average will start to come together. Start to get that loss of momentum for the move lower. Start to get, you know, some trailing stops get closer to market, all those kind of things. If we get up and through 61.40 or thereabouts, then that might be the signal that things have changed. Now, I know that a lot of you are going to think, well, heck, that's $2 away. And if that's your bag, well, then you can easily, you know, start to look at it. This is the second. Remember what I always say about that second signal? This is the second signal. So perhaps, and this is the 4 hours, having pilloried myself for talking about 4 hours, perhaps, you know, you go along here with a stop under that low from last night. You know, that kind of thing. But of course, I haven't talked about position sizing. I haven't talked about stop losses, any of that. General disclaimer on all of that. You've got to look after that yourself. Copper. Basically, we've got this little wedge pennant, whatever you want to call it, formation. It's respecting both sides. A resolution to the trade battle. Glasnost breaks out. Copper should do well. The fundamentals for the copper market are nowhere near as bearish as the financialization of copper in fear of the trade war, of a slowdown in economic growth, tend to suggest. The S&P. Now, I know these are getting long, and I don't mean them to get long. There's just so much to talk about. They'll be back to short after next Tuesday. Right, what have we got? Double bottom. All right, I've got a W. I put that trend line in because I think it's important. It's pulled up there last night. Now it's a three-touch trend line. Pardon me. More broadly, though, so if it gets up and through there and can close above there, then we're going to be talking about 28.23 or something like that. This is a big box. I think this is forming a range. So, you know, continuation range. It's got to get up and through 28.23 before we start talking about a rally recommencing and all that kind of stuff. So, but if it can get through that trend line there, which is 2752, then it might have a bit of a gallop. If you have a look at the NASDAQ, it's a similar story. Same sort of trend line, 6971. Remembering that's the 100 index. And the Dow Jones, I think, is similar. So it's got a double bottom, you know, kind of thing. And resistance for it is 25,861. So these are things we're going to have to remember for Monday. I would think. The DAX is really struggling. Still struggling below this line, still struggling below 11.7. If it can get up and through that trend line, it can run towards 11.6 and then 11.750, 11.428. So keep an eye on that tonight. Our local market, I put a box around it too this morning. So what have we got here? We've got a bunch of different things. That's a little trend line I drew on the 4 hours when I was mucking around with it this morning, just so I could write some levels in markets morning. You can see there, if you look at it on the daily, if anything, you'd be a little bit worried about that unless it can get up into this 5,800 for a potential breakdown, notwithstanding the fact that the MACD is still relatively positive. But for me, we could have a slide into the end of the week as people take their money, not just from the SPY, but from other stocks, as people take their money off the table for month end. They take their money off the table because of uncertainty. And then Monday's a gap, and really it's going to depend. So it'll be a big discussion Monday. After rallying a little bit yesterday, Bitcoin dipped, but this under 3,500 for the moment looks like it's trying to build a bottom, and then we'll just see where it can go, whether it goes up to 4,800 or something like that. Anyway, that's it from me. Good luck. Make sure in this world of uncertainty that your positions and your position sizes are right for your account size and your risk tolerance, because this is a big weekend for oil, for trade, for the trade war, for risk assets. It's a massive weekend. Could end up being nothing. We could end up getting we're not going to make it any worse. Most people will take that as positive. We could end up with a belligerent President Trump. Who knows? There's likely to be gaps on Monday, so be careful. Anyway, I'll catch you. Have a great weekend. Bye for now.